The overarching biggest deal is still the Fed. And right now, the Fed has kind of stepped back from its hawkishness. And the one thing that's interesting about that is that when we heard just little tidbits about the China trade talks last week, it's interesting to me how good a mood the market is and how willing to accept things at face value as long as the threat of higher rates seems to be gone. Now, one thing you didn't mention, we're in the midst of earnings season. And earnings basically, to me, is broken up into two things. There's Bank Week that we saw last week, and then there's Tech Week that begins the 31st and goes through about the 8th. That's a big deal. A lot of those names have done the heavy lifting for a long time. But yeah, I mean, China is still the biggest deal now. We have until March 1st. Now that we've put some good news into the market, I worry that there's a little bit of an opportunity for some back and fill in the market. 2,600 was this huge level in the S&P. I think a lot of people sold it against that level, and there was short covering up to those 2,680 highs. So I expect in the very short term a little bit of downside. But other than that, I don't think we're going much lower unless the Fed starts talking hawkish again.
Okay, but let's put the Fed aside for a second, Jim. Day 32 of the government shutdown. The Dow's up nearly 6% in January. When does the shutdown start to hit the stock market?
Well, this is interesting because the S&P is actually up 10% in the times down. And if you look at shutdowns over the last 50 years, the stock market is basically steady during shutdown time. So it's not a huge deal, but we haven't experienced one that goes this long. We've had some people who are coming out and talking about how it affects GDP. So it can affect the market within the next 2 or 3 weeks ahead, provided only if the Fed, and I know you said take the Fed out of it, but I will not do that. That's one thing I refuse because the Fed is there front and center. If they start talking more dovish to counterbalance slowdowns from the shutdown, then it shouldn't have much of an effect on the market. If they don't, that's where the problem lies.
Okay, and when does the Fed react? Do they react? And if so, how do they react?
Well, I think they will, and I think they've showed us a couple times. This goes back to summer of 2015 when the market broke 8% in 2 days, and all of a sudden the Fed came out and said the case for tightening is less compelling. Now, this time they tried to be a lot tougher all through 2018, but finally they caved towards the end. I think they realized that fundamentally, there's a lot of excess and a lot of weakness, and the Fed needs to be somewhere between dovish or at least very slow in their progression towards hawkishness in order for us to get out of this okay. So I think the Fed has a PTSD sort of thing, much like people like we do after seeing the two bubble busts over the last 15, 18 years. So I think the Fed right now has cracked, and I don't think they're going to get more hawkish anytime soon.